One of the biggest insurance carriers in the United States has recently announced that it will no longer be participating in marketplace plans as of 2026. Now, if you are one of the millions who get their health insurance through a marketplace plan, then this will likely affect you regardless of who your carrier is. Now, who is the carrier? How will it affect you? And what can you do about it? Well, that's the topic of today's video. So first, let me answer the biggest question. Who is the carrier? Well, it was recently announced that Aetna will no longer be participating in marketplace plans as of 2026. However, if you currently have a plan with Aetna, you're good through the end of 2025. You should be aware of these changes coming in 2026, so that way you can make your preparations sooner rather than later. And as I said, regardless of whether you currently have a plan with Aetna, it's likely that this will affect you as well. First, a brief refresher. The ACA marketplace launched in 2013 and was able to provide insurance with lower costs to millions of Americans. Big name insurance carriers like Blue Cross Blue Shield, Aetna, United Health, etc. have participated. However, throughout the years, participation has fluctuated. Aetna initially joined several state marketplaces, hoping to capitalize on the newly insured. However, as of 2017, it started to exit those marketplaces, citing financial loss and unsurety. In 2026, Aetna plans to pull out entirely, but those are not the only changes planned. More on that in just a minute. In a statement released in early 2025, Aetna confirmed it would fully withdraw from all remaining ACA marketplace plans starting in 2026. According to the company, the decision came after years of unsustainable losses, low margins, and difficulty predicting costs under the ACA structure. Executives pointed to market instability, the rising cost of care, and challenges in managing a diverse customer base with varying health needs as a reason for leaving. Of course, it all comes back to money. So what really drove Aetna out? Well, let's talk numbers. Now, many insurers have struggled with ACA plans because it seems that those enrolled in ACA plans tend to possibly be older or maybe sicker than those with employer-sponsored group health insurance. Now, is that necessarily entirely reflective of the current situation? Well, not really. It's not that those with employer-sponsored group health insurance are healthier. It's that those who don't have employer-sponsored group health insurance can really be broken down into two categories: people with pre-existing conditions and people without. The people without pre-existing conditions, perhaps a younger, healthier population, may take the chance and forego insurance entirely, relying upon their good health, whereas those with pre-existing conditions tend to possibly be older or sicker and know that they really do need health insurance to protect them against major medical bills. So this is the population that sometimes ACA plans are looking at. Many younger people simply can't afford to pay monthly premiums and choose to forego insurance if they are in good health. So the government sought to combat this by offering premium subsidies. These premium subsidies can make the insurance through marketplace much more affordable. And under the Inflation Reduction Act, many people were able to access plans with a $0 monthly premium. And if they were able to access such a low-cost, quality care plan, then why not enroll? So these premium subsidies would allow for a more diverse demographic for those enrolled in ACA marketplace plans, which could lead to lower costs for the insurance carriers. However, they don't always cover the cost of claims for insurers. Combining that with administrative complexity, state-by-state rules, and constant policy shifts, and you get a volatile business environment. Simply put, Aetna didn't see a profitable future in the marketplace world. So if you currently have an Aetna plan, here's what you need to know. Your plan will remain active through the end of 2025. But for 2026, it's imperative that you choose a new plan. Now, new insurers may step in. However, in all honesty, I see this as unlikely. And that means with less competition, that premiums may increase. Less competition amongst carriers can and often does mean higher monthly premiums. Carriers are simply not incentivized to offer low monthly premiums and even increased benefits if there's not as much competition. And it's highly likely that this problem will be further exacerbated by the likely reduction in premium tax credits. This is because those expanded premium tax credits are set to expire with the end of the Inflation Reduction Act at the end of 2025. I know, a lot of change is coming. So under the Inflation Reduction Act, Those who were previously ineligible for premium tax credits under the marketplace were suddenly eligible for premium tax credits on a sliding scale, making marketplace plans much more affordable. In fact, affordable for those who had been unable to afford them in years past. Additionally, those who were already eligible for premium tax credits were now eligible for much larger premium tax credits. In fact, 4 out of 5 people were now eligible for a plan with $0 monthly premium, once premium tax credits were taken into consideration, of course. So this problem has the potential to snowball. Fewer carriers and the reduction of premium tax credits likely means higher monthly premiums. Higher monthly premiums means limited enrollment, likely limited to those with pre-existing conditions or more extensive medical needs. Limited enrollment, likely restricted to those with higher medical needs, leads to less of a return on investment for insurers, which means lower profits. Lower profits means reduction in participation amongst carriers, which means higher monthly premiums, and the problem goes on and on and on. Some counties, rural areas, could go from multiple carriers to 1 or possibly even none. This would create major coverage gaps or so-called healthcare deserts. The elimination of Aetna in 2026 is a guarantee, but there are other proposed changes that you should know about as well. I'll put a video that goes more in depth at the end of the video, but here's just a brief rundown of some of those proposed changes. A requirement for increased documentation. The goal of this is to crack down on fraud, but it could just make enrollment more difficult, again leading to a more limited enrollment. Eliminating Dreamers eligibility for marketplace plans, and eliminating gender-affirming care. Again, if you want to learn more, I'm going to put that video at the end of today's video. I will also put a link to our marketplace playlist. That way you can learn more. If you have questions, you can reach us in the comments below or at the number on the screen. We are licensed health insurance brokers. We're licensed nationwide, so we are absolutely happy to help. And of course, there's no charge for our services. We do release these videos on a weekly basis, and now more than ever, I think there's going to be big changes coming to marketplace plans and health insurance. So please make sure to subscribe to stay up to date. And of course, make sure to like this video as well so we can get this information out there. All right, let's get back to it. Aetna's move has sparked debate amongst policymakers. Some lawmakers argue that this is proof that the ACA needs reform, more stability for insurance, better risk adjustment mechanisms, or even a public option. Others say it's a sign of corporate greed, insurers abandoning the sick and vulnerable when profits shrink. Whatever side you're on, it's clear that the landscape is shifting and millions of Americans are going to be caught in the middle. So if you are an Aetna customer or just somebody who gets their insurance through the marketplace, what can you do? Well, first, make sure to check your email regularly for any updates. Also, make sure to check healthcare.gov for further updates, and of course, keep your account up to date if there are changes in your income, your household size, or your location. It's possible that the open enrollment period may be shrinking for 2026, so make sure you stay on top of things and get into things earlier rather than later. You certainly don't want to wait to the last minute to start comparing plans or making an appointment with a broker. Now, Aetna's exit from the marketplace certainly is a big deal, but it's not the end of the world. However, you should make sure to stay up to date with any other changes that may be coming. If you have questions, you can absolutely reach us in the comments below or at the number on the screen. There's no charge for our services and we are licensed nationwide. And of course, please make sure to like this video and subscribe to stay up to date. As always, have a wonderful day and thank you for watching. Bye-bye.